Hey everybody, how we doing out there? Welcome aboard. This is ReadySetCrypto. Today is the Wednesday, the 27th of July, and you've got Doc and Mav here with you live, coming on board. So let us know where you're coming in from, and if you could, as you join us today, go ahead and hit the thumbs up button. Get things moving here. Go ahead and subscribe if you haven't already do that so far, but we'll get started here in just a minute. Let us know where you're coming in from today. Welcome, welcome. We have Matthias coming in from Amsterdam. Congratulations. How are you doing out there, Mav? What's going on in your world?
Hey, well, look at this. We got a crypto pump here. But in typical stream fashion, it looks like we've already predicated the return to reality. So it's not our fault, guys, if the market crashes during a stream. But overall, it's a green day for now.
Oh, we might take down Coinbase, but we won't crash the market. No, we won't do that. All right, we got another Amsterdam. We got Newport Beach checking in. Fantastic. We're coming to you from sunny South Carolina, sunny and humid South Carolina today. No trading at the moment. All right. So what we'll do, the way that we do this stream is that, we waste a little bit of time at the very beginning because we're trying to get everybody to see their emails and say that, hey, Mav and Doc are streaming. So we'll get going here in a minute. We're trying to get everybody in the room. And once we get a quorum in here, Mav will drop some knowledge bombs on you and talk about the market, the overall state of the market, what's happening, what's hot, what's not. And while we're doing that, if you guys want to chat in any coin pairs, give me some tickers to work with, I'll switch over to technical analysis on the back end of this session. We'll be out of here in about half an hour or so, and you'll be no worse for wear after that point. So there you go. Okay. So again, let us know where you're coming in from. Hit the thumbs up button, and we'll get started here in just a minute.
So for those watching the markets, let us also know where do you think Bitcoin is going from here? Is it going to sustain any of this, let's say, rally to the upside? A nice little bounce from, looks like about 20,000 and change to, looks like it briefly eclipsed 24. Is that the last time we'll see it before, or is it going to recover? We'll get into that very soon here. But before we do, I'm going to quickly say a little prayer to the screen share gods and make sure that this works here. But yeah, guys, it is very much the case that, we've already talked about this before. It's a Fed hike, and more than that, we've talked about what was the things you need to be watching in July. And this was one of the big ones, because what we were hoping to see, or I don't know, even if it was an expectation, but really it was the sense that the Fed would shock and awe in some way. And they didn't. They sort of played the expected 75 basis points move, not even going into the old rabbit in the hat trick and pulling out 100 or something like that. It is very much the case that the Fed is trying to control the narrative. That is what they do. They are here to fear people into not spending. That is how you rein in inflation, at least according to the traditional dusty monetary policy handbook. But as we've clearly seen this year, things don't always go as the playbook lays out, if you will. We are still in a possible recession environment. People have that word on their lips quite frequently if you listen to the mainstream financial media, etc. But what's really the case is that, yes, some things are bad. Yes, some things are good. And it's not really the case that we are or are not. It's just this liminal space between, yeah, the economic condition is not ideal, but is it doomsday? No, it's not. And that's just kind of not the answer anybody wants to hear, which is unfortunate because that is where we find ourselves. So what is quickly becoming the case is the Fed, in their infinite wisdom, is trying to, as I've covered in our newsletter this week, trying to rein it in, and based off of where their averages are going, it looks like they could do about 3.8% in 2023. Not enough to get things under control. Not enough to basically rein in all of this runaway inflation, and certainly not enough to give the economy the call it a shot in the arm. Confidence it needs to get back on track, get the supply chains under control, get consumer confidence back up where it needs to be. Things are just kind of wonky in a lot of ways. And it's very clear that the Fed is not capable of using their traditional playbook to get this under control. So it was our hope that maybe they would try something a little bit more, call it unorthodox. But the problem is if they go too fast with their rate hikes, and they go a little too fast with their, trying to get everything under control and too much fear into the system, well, that's like slamming the brakes when you need to come down from 100 miles per hour in your truck and you're not wearing a seatbelt. What they prefer to do is slowly tap on the brakes and bring everything easily under control. That's what the playbook dictates. But what is very clearly becoming the case is that they are not in control of the truck. The truck is run away in some ways, and they are trying to tell everybody that it's under control, everything is fine. But what's very clearly been the case, and I think will continue to be elicited in the coming months, is that the Fed is only here to try to control the narrative, but they can't, make ships go faster. They can't make corn grow faster. They can't make oil pump out of the ground faster. They can't make the economy do what it needs to do in a way that it needs to. And it's very clear that at some point very soon in the future, we're going to see a dovish Fed that pivots towards talking about unemployment and things related to that versus the strictly inflation Fed that we're currently stuck with. And when that happens, I think that's going to signal, especially for crypto traders, as Doc will get into here in a sec, that it is time to start looking towards the future of where the markets could go. And that is the story of 2022, unfortunately, or fortunately. This is a just weird year for a lot of reasons. It is unprecedented in a lot of ways. But at the same time, it is, the time-tested story of the Fed trying its best to, outplay expectations and sorely missing them when it comes to reality. And that's where we find ourselves, is they're going to have to go back to easing off the quantitative tightening. They're going to have to go back to money printing and try to get this economy moving in the right direction, because it currently is not. And no amount of threats and posturing by the Fed is going to change that. This is not a monetary policy issue, even though that is a part of what's going on here. This is a fiscal policy issue. This is something that needs to be done at the Congress level, across the world. As I was talking about in the newsletter today, we've been talking about contagion in the crypto space, but the reality is there's contagion in the global macro economy. These systems are all interconnected. And as we've seen over the last 2 years, when there's suddenly a supply and a demand shock, it's very hard to, if not impossible, to get them to restart, to be moving in the direction we need it to. And so this comes to a very natural conclusion that inflation is here to stay. These wacky, wonky economic policies are also here to stay. And we're going to be dealing with this far into the future, fortunately or unfortunately. I think this is what we've, just a natural conclusion or continuation of what we've been talking about regarding people need to be exploring risk on. They need to be exploring alternative assets. They need to be getting away from things that, such as gold, where it's not done a whole lot, really. It's not been the safe haven asset it sometimes is proclaimed to be. And that's because the rules are changing. Just because something has always been a certain way does not mean it's going to be that way in the future. And I think that's a very natural, good segue into what Bitcoin and crypto represent right now. Yes, they've been nascent. Yes, the industry is immature in a lot of ways and gray zone, wild west, whatever. It's very clear if you've been watching any of the news this week about Coinbase being investigated by the SEC, Kraken potentially doing some things related to sanctions, and it's very clear that the centralized finance space, the CeFi space, the punching bag of everybody right now. And it's because it's not doing what it needs to do. It's not serving as a space where it's attracting new people into crypto, and it's not providing the bridge that needs to be there to get people into DeFi and other emerging aspects of crypto, such as Web3 or NFTs. It is proving to be a thorn in the side of many, and that's why we're going to probably see over the next couple of years, call it like CeFi 2.0, where there's going to be better regulation in place, which I know scares people, but it's very much the case that people are not going to tolerate another Luna or Three Arrows or Celsius. We definitely do not want to see something like that happen again, at least in the centralized finance space. This is because it is looking very bad for many reasons, to regulators, to new people, people who are on the fence. And I think that's where we're going to see some changes, at least at the regulatory side of things, which is, I think, not as scary as some people put it out to be, especially if we're involved in that process. But we have to be vigilant. We have to watch what is coming down the pipeline. And if it's not aligned with what this space stands for, we have to be very loud about that. We have to evolve the space in this time where, call it build the dip or whatever. It's during times like these, especially when the market's going up like this, that, hey, we can't forget why we're here. We can't forget that this space is in it for the long haul. And it's not just about line going up, even though that motivates a lot of us. We need to play to the longer aspects of this. And that involves being very, just forward looking, and hopefully we can build the space better, so that the next time around, by the next halving, if you will, that, hey, 100K was just the start. Maybe we're going to explore something beyond that. But to get there, to imagine that world that supports 100K or plus Bitcoin, we have to ask ourselves, what is preventing mass adoption right now? And I think in a lot of ways, it's the on-ramps not being very good at what they need to be. And that is a problem I think we can solve in the same way that Ethereum and a lot of the smart contract platforms are tackling the issues related to scalability, interoperability, et cetera. A lot of these like long-standing problems with crypto. We also need to look at this space, outside looking in and say, what's preventing people from trusting the space, wanting to be involved in the space, especially when they're feeling the crush, the boot right now on their throat from what is the worst of TradFi in terms of, pittance of rates, people being crushed by the rising cost of housing and groceries. There's a lot of reasons why they need something like crypto right now. So we need to be able to provide them something that gives them an alternative, gives them something different versus the traditional space, because again, it's not serving the needs of the many. So that all aside, it's an exciting day to see Bitcoin and some of crypto rallying, especially after months of sideways action. Is this going to stay around? I don't know, but I think it is proving that, hey, this narrative about Bitcoin being a reflation hedge might have some legitimacy to it. So that all aside, Doc, what are you saying from your perspective? Are you thinking Bitcoin is reach the top for today, or where do you think it's going to go from here?
Nice job there, Mav. All right. So let's look at the chart. Actually, you know what? I didn't hear much of what you said because I was staring at that light behind you, like just it's sort of hypnotic, right? Anyway, okay. So let's take a look here. See if we got the right. Yes, we do. Okay, so first of all, what I want to look at here is the NASDAQ 100 because this is acting as a proxy for all risk assets. So as goes this chart, so goes the rest of all risk assets. So again, this is the NASDAQ 100. This is got all the Amazons and the Metas and the Facebooks and Apples and everything else like that in there. So unfortunately, we have not decoupled from the equity markets and especially in the NASDAQ. So watch this one if you want a proxy for where things are going. So I'm looking for maybe an August rally from this up to someplace in this area. I don't know if it's going to stick or not. Somebody else was asking about the strength of the dollar. And right now I see got the wrong one here. So let's go with the DXY. The dollar index right now has come down just a little bit. And to some degree, I think this is what we're seeing. Here, let me get my magic pen going here. This is why we're seeing a little bit of strength in things lately. It's because the dollar index has come down, but this is not what I would call crashing. This is a standard swing pullback at this point. So if we see this going higher, we'll probably have difficulty in most assets. Again, if you think about how things are done, whether or not you're using USD or USDT, so whatever asset that you're trading, if you're trading it versus the dollar or tether, if this is going higher, this is going to put more pressure on your asset to maintain par value. Or if it goes lower, then you get, because you're short then on the dollar versus long on your asset. So if this continues lower to this trend line, we may see assets continue to bump higher. Okay. So watch something else, which is also the 10-year note. Watch the bond market because they're known to be very, very smart, right? So if we have interest rates on the bond market actually going down while the Fed's up here trying to go higher and shooting for 3%, well, hell, we've already been there before the bond market hit that back in June. And so the Fed's desperately trying to get there, and the bond market is saying right now is like, that's so last month. And it's starting to price in perhaps a recession. And oh, by the way, tomorrow morning we get our first look at GDP for the second quarter for the U.S. And the White House has been getting in front of that one quite a bit already, talking about how, hey, 2 negative quarters of GDP does not equate to a recession. Well, yeah, it always has. And so Yellen's been in front of that one as well, too. So it's interesting to see, gaslighting occurring on an epic scale right now, just trying to keep things together. But what I would say is, guys, watch this, watch the bond market. If it continues to go lower as the Fed's going higher, there's a massive disconnect there, and it will catch up, and it will mean lower prices for nearly all assets. Okay, so let's do this. Let's get over to crypto. And if anybody has got any tickers that you want me to look at, please chat those in. And I'll look at some of the ones in the top 20 here. So we're getting a nice move today. Anytime you get a 6.8% move in an asset, I mean, that's awesome. And we're currently still long on this one. We can raise our stop up underneath the most recent lows from yesterday. So that's good. And also what is good for this is that we now have full energy on this thing ready to rock. So watch for this thing to break 24,000. To me, this is just a trade. This is just a trade up to 28. This is overhead. Supply is going to be tough to get through in the first time up at 28. If you get up to 28, sell into strength on that or peel off part of your position and get ready for the next move down. Now, if this next move down creates a higher low and it breaks above there, then we have exactly what we're looking for. That's a change in polarity at a larger time frame. Otherwise, I would expect to see some strength in assets into the month of August. And then as we get into September and October, all hell could break loose. This is typically when we have major assets encounter difficulty. If you look at most of the crashes over the last 30, 40 years, they've happened in October. So just be cautious of that. Okay, so that's Bitcoin. Let's go to Ethereum. And Ethereum is very, very close. We're looking to sell out of this thing as it gets up to 1,700. So 1,700 to me is the bottom of the shelf for overhead supply. It's already having difficulty getting up and over that level. I may just sell into the 1600s if I have to. But again, this is for a trade. This is not for trying to catch the exact bottom of the market. This is a trade to go up to resistance. At some point, we'll probably head lower again. If that creates a higher low and then breaks out to a higher high, then that is what we're looking for to go long. I've talked to you guys about looking for things like Heikin-Ashi candlesticks at the weekly chart. So look for those on the weekly chart to start throwing off some greens, and you can go long when that happens. Although my sense is that this is probably just going to roll over as we get back into the fall and really test the bottom. The bottoms have been very, very complex when it comes to crypto before they do launch off again. Okay. So I'm going to check the chat and see if there's anything else. Okay, so hey, Joaquin, how's it going? Let's get into Phantom. Let's go check on Phantom. You guys let me know if there's anything else you want to look at. Otherwise, today's session will end up pretty quickly here. All right, FTM. So what I'm seeing on this, let's just go to price only. This is what is called a basing formation. So we saw a lot of this in 2020 and early 2021, where we had these big basing formations like this. And what you want to look for is treat it like a big cup and handle. So it bases out, and then what you should see is a big break above that neckline on big volume. You should see big volume breaking it above the neckline. In this case, the neckline is about 50 cents versus Tether. So I would let this thing just continue to bash around under there and take the break as it gets above 50, but it's got to be on big volume. Got to be on big volume. Okay. Tuning in late, did you miss anything? Well, you know, the great thing about this is that you can always replay, or, you know, you can actually turn up the speed on this thing and you can go into the future and then come back and tell us what happens to the market later on. So that is the great thing about this this platform, is you can always watch this stuff later on and you can always catch up. But there you go. Okay, so let's see. Steph, you talked about YOP. Let's see if we can find some YOP here. YOP versus Tether. All right, so let's go with KuCoin. Now we got somewhat of the same situation here. So we've got this big long trend line that's in play. We can even go out to the weekly chart and bring this thing down. Look at this. I mean, do you need any better indication right now? So wait for this to break. I would say wait for this to break the trend line, and also wait for it to break above the most recent lower high, which is about 20 cents. So to me, 20 cents would be the entry that you might want to look for. Look for this to base out down in this area like here, and then look for a big break there. We're not getting the volume right now that we really need to break this thing out. So as long as it stays below that line, stay out of it. Stay out of it. All right, XRP, baby. All right, we'll look at XRP. We shall. All right, this is a weekly chart. So you can see this little mini base happening with XRP as well too. So that's just a little mini base that's happening there. Let's go out to the daily chart. See what we got. Not much yet. So again, this is that base I'm talking about here. I'm seeing a lot of coins doing this basing, and I'd like to see it, you know, really, very honestly, I'd like to see this above 45 cents before I want to go long. I want to see this go through a big long base and build out a lot of energy. If we look at this on the RSI Laguerre, we want to see like weekly charts setting up. It just doesn't have the energy right now. So I want to see this thing build up the energy and then blow up above 45 cents. And I think that would be a good long for this one. Okay, FLM, Frank Lloyd Marcus, FLM. Okay, this one is difficult because this does not really have any trend right now. The trend is all to the downside. So what you can do on this one, again, just connect the dots and don't trade anything until it gets over this line, right? So you can see some of the base here. A lot of these are showing up with highs all around the same place here. Notice this level here, which is about 30 cents. So there's obviously some overhead supply sitting up here. Somebody's selling every time it gets up to that area. So what you want to look for is, in this case, you want to see it put in some type of a higher low, break above here on big volume. It's got to be big volume to break above there. And you can even wait for it to break above, say, like 35 cents or so. But that, those are the clues that you see in a chart. Again, technical analysis is not here to predict the future, but what you can do is you can understand what's happening with the supply and demand auction by looking at the chart and looking at support and resistance. You don't need any fancy indicators down here. You don't need any of this stuff, right? You can just see this on the chart. Where's the price finding overhead resistance? All right, let's see. Any thoughts on loop ring? You're going to make me look at the ticker. I don't know what the ticker loop ring is. I'll fumble my way through this. We'll see if we can find loop ring. All right. I did okay. Here's loop ring. So what I'm seeing here with loop ring is, again, we're basing out. It looks to have broken out amongst this. So what I would look for on loop ring is kind of the same thing here. Loop ring seems to be basing out underneath 60 cents. I would wait until you get above 60 cents, maybe even the 200-day moving average before I play with this one. Okay, Rune. Let's go look at Thorchain. Rune. Okay, what's happening with this one? Let's see. Thorchain. There's that base again, guys. There's the base again. And I'm saying that the aggressive buy is going to be somewhere closer to this level right there, which is about $3.90 to $4. Let it go ahead and just chop around down here. Don't try to pick the bottom. There is no metal that's given out for you getting the absolute bottom tick of any move. All you're looking for is the price to start bending the shorts over backwards. And you'll start to see it when the volume increases. So I would look for maybe $3.40 or $3.90 to $4 on that one. Okay, sand. I haven't seen sand in a long time. Let's see. Sandbox, right? Sandbox. Look at this one. This is even better. So this level here, look at this level. This is what I mean by looking at charts. I mean, charts are not meant to be predictive, but it's more of analysis. Like every time the price gets up to there at $1.50, it can't get through. Can't get through at $1.50, and then the sellers overwhelm the buyers. So what you want is for the sellers to sit over here and get really, really confident and cocky, in fact. And then this is what causes the short squeeze. When you get the volume coming along here that blows the shorts take a new position and they say, here we go again. We're going to go all the way down to $1. Then all of a sudden they're back on their heels and it's $2 and they're starting to lose a lot of money. And this is where they have to buy their position back. And that adds to the demand. And this is why the volume peaks out up here. So wait for this to break $1.50 on big volume, and then there you go. But that's a beautiful base for the sandbox. I like that. Okay, so that's Techno Frank. Let's see Alpha Plus. Let's look at QNT. All right, I'm going to speed these up a little bit. Okay, for this one is starting to work higher. So it's starting to work into a series of higher highs and higher lows. So what I would wait for is for this to prove that it's a higher low and then take the breakout from this level, which is about 110. If you get some decent volume on that, if you get some decent volume, a breakout at 110 could start the train to running as it gets above the 200-day moving average. So interesting pattern there in QRT. Okay, LRC, I think we just looked at that one, right? Isn't that loop ring? LRC? I don't know. Okay, so I would say this one looks to be the very first base would be about 50 cents to break out above there. If you want to be more conservative, you can wait till maybe about 68 to 70 cents on this one. But that is a base forming right now on LRC versus the US dollar. Okay, next one, Kiba. Steven is asking for Kiba. Kiba Inu. Is that some kind of dog coin again? Is INU, does that mean dog? Okay, so where we're sitting with this one is I would wait for this one to break above 0.000011. Right, so this is where I'd be looking to go long is it breaks above here because this is a higher low and that would create a higher high. If it breaks back down into the pattern, get rid of it. But this would be your first possible long on this one. Okay, let's see. Dun, 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 dun. BG is looking for looks. And we'll just do a couple more here and then get going. Oh, that's a pretty miserable looking chart. But, you know, most of them are as well, too. So don't take it personally here, but it's this base is running into the same apex as the triangle here. So the very first long could be as it breaks above 50. Breaks above 50 could be your first potential long. And this is building out a pretty big base as well as everything else is too. Okay, QNT. All right, here's our last one. Our last one for today is going to be waves, and then we will send you on your way, y'all. Waves versus USDT. Basing, and the base here is 750. So look for the break above 750 on good volume. I don't want any of this crap. I want to see good volume here, breaking above 750. Take the long, watch out for the 200-day moving average. You're still below it. And that may work out for you. Okay. All right, everybody. Let's go back here. We're back. Thanks for all your great suggestions. It's always great to look at, you know, different markets. We usually look at the same few over and over again. And it's always good to see other eyeballs on the market and look at things like that. But, you know, I think you'll agree with me. And like a lot of charts look the same. They're all building up the same base. They're all winding the spring up right now. They're winding the spring up, and you put all that potential energy into there. When the bigger market breaks, I think you'll see everything run all at once. And then it's going to be a question of like, okay, where do you put your capital? So before you take the next long though, all right, listen to me guys, before you take your next long, so anything that we talked about today, remember rule number 1 of risk management, which is define your exit before you enter it. You'll thank me later. Okay, define your exit before you enter long. Don't enter long and say, well, it's going higher. I don't really care where it's going. I can't tell you how many questions I've taken over the last 4 years saying, hey, yeah, I'm a hodler, but where should my stop be? Well, wait a minute. That's two different things, right? Are you either a hodler or you've got a long-term horizon on these things, or you're a trader and you're looking for a swing to get long in, you're looking for price accumulation. Right now, guys, I would be focused on being traders until the bear shows that it's over. So play these as bear market rallies, be safe, stay in cash, keep your powder on the sideline, look for these high probability rallies, play them, get your fair share, and then get the hell out of it, right? let somebody else take all the bruises and bumps as this thing finishes out the bear. Okay. All right, guys. That's it for us here. Mav, do you have any closing thoughts for the fine people that are out there?
Well, I always thought that rule number one of risk management was that you don't talk about risk management. No, you definitely hit the nail on the head. This is a nice little pop, but we are unfortunately subject to the whims of the macro market and conditions. And so just play it safe, have some fun with this, but also recognize that this is not a bull market. This is definitely something that we have to look for the right sort of conditions that are going to turn this around. So we covered in the past, that would be, the Fed going a little bit more dovish. It would be supply chains starting to get back under control. It would be a cessation of hostilities between Russia and Ukraine, things of that nature. But right now, there's too much uncertainty in the markets to play this anything other than being, very risk averse and capital preserving. So to that end, guys, as always, it's free to join our communities. It's where we talk about this kind of stuff. So we want to help you get a system, get a mindset, a mantra, whatever it takes for you to stick to your rules, your system, so you're not, seeing stuff like this and breaking them. Because if you do that, then you're going to just keep repeating the same mistakes that you might have made in the last bull market or into the bear market. We don't want that for you. And so that's what ReadySetCrypto and the ReadySet community is all about, is helping you become a better trader, a better investor, better manager of your money. And certainly as we look forward to whenever we see a return to the norm, or, at least a return to Bitcoin all-time highs, that you're well positioned both from a knowledge and capital standpoint, so that you're not sitting on the sidelines watching it run away without you. You're actively participating and, hoping that you can ride that thing as effectively as possible. So whenever that day comes, we'll hopefully be ready together. But until then, that's what we're here to do, is help you navigate the trials and tribulations, and sometimes a little bit of triumphs like today, of this crazy bear market. It's going to be like this for a while, but at the same time, it doesn't have to be all bad. We can take this time to learn from each other, and play it a little bit safe, but also a little bit fun. So if that's at all interesting, as I shared earlier, we put out a daily newsletter, as well as we have a free Discord channel. We have a couple other communities such as ReadySet Trade, which is all about helping you become a better trader. And if you don't know how to do that at all, it is free to join as well. So really no excuse to start taking some of this time, learn how to become more effective at your craft, and how to avoid making some of the mistakes that you might have made. Again, if this sounds at all interesting, we're not here to pressure you into doing anything. We just want to help. And that's what the ReadySetCrypto community is all about, is just providing genuine advice and guidance and things that, are not shilling, basically. That's what we're here to help with. So again, our communities are down in the bio below. Please join if that's at all interesting. And until the next one, guys, take care out there. Hopefully see the markets continue to go up from here, but we'll see. But until then, we'll see you guys next week. Take care. Take it easy. And see you then. Cheers,
all right,
guys.
Everybody be good. Thanks for showing up this week. We'll see you guys next week. Take care.
Cheers, guys.